As a business owner, you may be looking at your books and looking to cut some costs. Taking a look at your lending options may save you more than you think.
Hey, friend.
Hey, Anna Mesmer.
The Loan Lounge, coming back.
We're here.
What are we talking about today? We're talking about financing businesses, looking at kind of alternate financing options for businesses.
Or like just the understanding that we don't just do real estate.
Yeah.
Like I think a lot of what we talk about is real estate focused or like simple real estate, like single family, 2 to 4, 5 plus. But we do more than that.
We do.
And so we thought, why not bring in some of those moving parts? So one deal that I would love to highlight is we did a pretty large equipment deal. So equipment owner here in Columbus, Ohio, ran a business where to be honest, I didn't even fully understand his business. So he runs cable lines for internet sources. Like the underground stuff. I'm
cool.
like, oh, very interesting. But he had an SBA loan, very high interest rate. It was like a $2 million loan. And so those rates, they affect those terms and conditions so significantly. And he had been in it for a minute, which I think SBA is a good solution just to acquire. After that, you just need to be mindful. And I think that's what we're really trying to resonate through this podcast is just being mindful, mindful of at what point do you need to speak to an LFG representative to ensure that you're kind of taking a look at your finances and making sure you're in the right position. So for this business owner, he got in touch with me. We chatted about what he was trying to accomplish. We found him refinance terms. We dropped his rate 3-4%. Yes, 3-4% from where he was in his SBA loan. We even did a slightly shorter term, so he's also paying this loan off faster. The payment increased just a little bit, but over the life of the loan, he was saving $1 million in interest.
Yeah.
That's a lot of zeros.
That's a lot of zeros.
So and again, was he going to be in that loan long term? No. Again, it's a stepping stone to get where he needed to. But just to think that there are business owners that would sit in that loan and just be busy and not kind of looking at the weeds to make sure that there's not money that could be saved. And they would sit in that loan longer than they needed to. So I think what I would love to resonate is just the fact of an annual review.
Yeah.
Of, hey, sit down, shut the door, turn off your phone, and do a deep dive of, is there ways in your business that you could be saving money? And I definitely think lending has a factor in that to assist.
Yeah, I want to go back and just highlight kind of the timeline. So let's say you've got a great idea and you want to start a business. Okay, fantastic. You get an SBA loan. If you have no history in the business at all, then chances are you're going to need an SBA loan. Yep. You're going to get into that to begin with. Yeah. They're going to ask for a business plan and 2 to 3 years of projections.
Yep.
You'll go through that process. It's a lot. It's 6 months. SBA is not. It's not a good time.
Long process.
Very long process. And then once you get into it and you've got a couple years in the business, then your options open up quite a bit.
Yeah.
Because now you have a track record. You have financials that we can then take to a business or to a lender. Most lenders are going to want to see 2 to 3 years in a business of making money and being profitable, right? And then we can look to get you out of that SBA loan and get you into something that's more reasonable. So it's not just real estate, but to your point, it's equipment. So he had all kinds of crazy machines and robots and mechs and all kinds of.
He was talking about some of these equipments, and I Googled it, and I was like, I have no idea what that was, but that's very
even after you Googled it.
After I still have no idea what this thing is, but that's really cool. Yeah. And I would say a lot of people go the SBA route because they tend to, and don't assume this, but they tend to have a lower down payment.
Sure.
Where if you go with just a smaller commercial bank, they're typically going to want 20% down, and that's where a lot of starting small business owners just don't have the cash to make that work. I wouldn't make that full assumption because even recently we've been kind of digging in deeper into our SBA options as more and more clients are asking for those type of lending options. And to be honest, 20% is sometimes the requirement to make the deal work for everything to kind of pencil out correctly. So outside of that, I guess to kind of talk about business owner annual reviews. So we're coming in towards the end of 2024, and even LFG in the next 30 to 45 days will have that annual pencil to paper, writing everything down. And I think too often people have expenses that they should just kind of take a look at. Perfect example, most business owners have a location of some capacity. So are you renting that location? Here in Columbus, commercial rent rates are continuing to increase and increase and increase. And I don't know that we foresee that ever to change, especially with the amount of growth that's happening in Columbus. So could you acquire for a similar monthly payment? That's for us to figure out and kind of discuss so that you know what your options are. I think too often business owners get really busy and lose sight of opportunities where their business can now own real estate, and that can be part of their overall evaluation as a company. So I think it's looking at those things. You also had a deal recently where you're kind of like cross-collateralizing, so using real estate to acquire something.
Yeah, that's something else that I think is forgotten about. Like, so there's a couple different ways to lend on real estate. And the common ones, people know, okay, if I buy something, I can put the debt on the thing that I'm buying, right? A purchase. I can do a rate and term, which is where all I'm doing is I'm refinancing the debt that's existing and I'm not taking any cash out. And then one of the more common ones for our investor friends, cash out refinances. So that's where you are using a new value and you're taking out cash from equity that is available. So then there's another one that is not commonly thought of, but it's kind of a hybrid of a cash out and a purchase, and that's a cross collateralization. With cross collateralization, what we do is we use real estate that you already have, and we make that a part of the deal so that we're using that equity for either down payment or the entire purchase of a new property.
Yeah.
Right. And this can be done in a couple of different ways. You can either make it all one singular transaction, or you can break it up into multiple transactions. So right now I'm working on a large commercial deal where the property itself did not cash flow. So a traditional bank, a traditional lender wouldn't be interested in doing that.
Yeah, because commercial banks have a higher cash flow requirement.
They have a higher cash.
Yep.
And really, I mean, nobody wanted to do it because the cash flow was pretty terrible.
It was awful.
And so while we do have options for that where there isn't a cash flowing property, the interest rates on that are pretty high.
Yeah.
So the alternative that we came up with is using a cash out refinance across a number of single family, 1 to 4 family properties and using those funds to buy a $1.4 million property. So like when he goes to get that $1.4 million property, the actual cash that he's bringing outside of the loan that we're doing is like $20,000.
That dog hunts.
Yeah.
Yeah.
That's pretty sweet. So, I guess it's just another reason to give us a call and talk to us about what your specific situation is, because you might not be thinking of a strategy to get after something that you're going for.
Yeah. I think especially because we work in this space and our traditional client is an investor, which is layering. I think we're always thinking on our toes as to how we can be competitive, how we can be strategic in the lending space to ensure that some of these transactions that seem a little bit far out, a little bit tough to reach, can actually be super obtainable.
Yeah.